Okay, so I am live with Rob Bolandian. He's been someone that I've known for multiple years, just someone that I really respect and excited to have him on the show. Rob Bolandian, I'm just going to do a quick intro and then Rob is going to go into detail into his career, everything that he's doing at Cambridge Wilkinson. So, Rob Bolandian is the global head of investment banking at Cambridge Wilkinson. Cambridge Wilkinson is a leading global New York City-based investment bank that specializes in debt and equity capital raises, fund finance, as well as manager support, mergers and acquisitions, advisory services for lower middle market and middle market businesses across all industries. And the capital raises and deal sizes range anywhere from 25 million to 5 billion. So, Rob, thank you for coming on the show.
You're quite welcome. I look forward to it, and thank you for having me.
Yeah, well, let's jump right into it. Why don't you share a little bit about your background, your career, where you cut your teeth? What did you think you were going to do, starting out as a young professional and, walk us through some of the transitions and where you
Yeah,
got to go now. And then I might interject intermittently to kind of just maybe add an anecdote or add a reaction to some of your storytelling.
happy to do it. So let me give you a little bit of background. So as you mentioned, I'm a co-founder of Cambridge Wilkinson. We are a privately held New York City-based investment bank. My co-founding partner and I founded this investment bank and literally built it from the ground up about 10 and a half years ago. Prior to that, straight out of college, I was lucky enough to meet a multi-billionaire family who was building what would become a fairly significant family office. And I got lucky enough to join that family office. Initially, I was a bank analyst with public securities as a junior analyst and an analyst. And then I became a portfolio manager and did merger arbitrage. Over time, the Patriarch's business actually grew quite rapidly. That got sold to a very large public bank. It was a significant liquidity event, north of $30 billion, and we then formalized a family office initiative and built a proper structure to do all kinds of global investing. Think of it as an institutional size and scale portfolio. It just happened to be for one family, given the orders of magnitude of their wealth. It was it was a 22-year run or so, 22-year run. It was an incredible experience. I can't say enough about that family, and I can't say enough about that experience. I took that investing experience, and it was fund investing, M&A experience, buyout experience, alternatives, private equity, real estate, and so on, and built what is now Cambridge Wilkinson. So I'm going to fast forward you 10 years to today. My partner and I started, it was literally two of us, and we built the investment bank to raise debt and equity for all kinds of operating businesses. While technically we are industry agnostic in the companies that we represent, our four biggest verticals by far are raising capital for specialty finance companies, real estate, sports entertainment, and ESG, with a particular emphasis on renewables. The low end of our capital raises are kind of 25, $50 million. The higher end at the moment, I think you referenced as an example, we're currently negotiating a term sheet that we have in hand that's 5 billion. But on average, I would say we spend most of our time raising capital between 50 million and 500 million, whether it's debt or equity or anything in between. We are now 40 plus bankers and originators across the world. We're headquartered in Manhattan. We have coast to coast coverage in the United States. We have coverage in Canada, Western Europe, the Middle East, as well as the Far East and Australia, either with licensed bankers, originators, and or senior advisors. So it's a global footprint. And all of our investors are institutions or institutional caliber. They fall in three primary buckets. The first one, by virtue of my background, is very, very large family offices. That's kind of 500 million to a billion on the low end. I think technically our largest multifamily office is around 400 billion, and everybody in between. They all do debt equity and M&A for us. The second bucket, of course, is all traditional private equity, all the big guys, all the way down to lower middle market groups and everybody in between for equity and M&A. And then finally, there's this third big bucket for all things debt, structured equity, mezzanine, sub debt, forward flow, et cetera. That's banks, private credit funds, multi-strat sovereigns, endowments, as well as large insurance companies. We have a second business that's developed about 3 or 4 years ago, which is a fund finance business, where we're organizing credit facilities for private equity funds and private credit funds at the fund level. So non-dilutive GP financings at the management company level. I know these are a lot of technical terms, but we can certainly
Yeah.
dig into these, as well as NAV facilities against the value of the equity in these various funds. So that's CW, Cambridge Wilkinson Fund Finance, and kind of the mothership is the investment bank. I throw a ton at you there, Joel. Let me
Yeah.
just pause for a second and answer any questions. I'll add one other thing. I would say 70+% of what we do has a private credit orientation. Obviously, that's the name of the game today, and I'm happy to dig in as to why and how.
Sure. No, I really appreciate you unpacking all of that. I would love to know a little more about just the utility of fund financing for GPs. And this is just, more of just general
Yeah,
information. It sounds like, just for the audience too, that additional fund financing just gives them a little more resources if they want to scale up and maybe invest in their team, invest in more infrastructure. Obviously going to these events to meet LPs, costs money. So
yep.
I would see, just me kind of looking in as an outsider, I'm assuming some of that utility comes from just helping people scale. But is that kind of the main use of those proceeds, or are there other opportunities for them to possibly, double down on deals, or is it mainly just for the operations of the
Yeah,
business?
yeah. Let me talk to you about a couple of different structures that we organize and kind of the uses of the capital, right? So the first one is called, as I referenced earlier, non-dilutive GP financing. So these are credit facilities where the management company fees and carry are the collateral,
Hmm.
right? So the uses of these proceeds, which by the way, in the low end are generally 20, 25 million bucks. On the higher end, they can get as high as a couple $100 million, depending on the size of the fund and the fees running through the management company. Um, we can do them, by the way, on a rated basis with our insurance groups. We can do them, and if we can't get them rated, we can do them with unrated with our private credit groups. The uses of non-dilutive GP financings are things like raising working capital, buying out minority partners, buying out majority partners, doing acquisitions, bolstering an existing investment strategy, and or bolstering an existing investment inside of the fund, and
Hmm.
or developing new strategies in the case of multi-strategy funds, right? So
Sure.
the key to these facilities are the two words non-dilutive, right? So you're not permanently diluted in selling a piece of your GP. It's generally coupon only. And like I said, the collateral package is are the fees and carry that are running through the management company. The second form of facility that we're organizing are NAV facilities, so net asset value facilities. These
Hmm.
again are non-dilutive generally. They're coupon only generally, and they are credit facilities against the equity value or the NAV or the funds in their entirety, typically private equity and venture capital. And the uses of these funds are akin or very similar to the types of things that I described earlier. It's just a different form of facility, and the collateral is obviously different. These can go, a lot of our GPs, these aren't high LTV, high octane credit facilities. A lot of our GPs literally are looking for NAVs between 10 and 30%. And those are probably the relevant ranges relative to NAV. And then finally, there's one more facility and or transaction we kind of organize in the fund finance bucket, and that is continuation vehicles, right? So I'll give you an example. A private equity fund, is coming at the end of their fund life. They believe a particular asset within the fund has a lot more upside. They will take that asset. I'm oversimplifying here, obviously. They'll take that company or that asset, remove it from a fund, put it in a single purpose SPV. We will then raise capital for that GP to hold on to that investment, continue to grow the
Hmm.
EBITDA, and likely and hopefully, the goal is obviously to sell or get a liquidity event at much higher levels. So continuation vehicles are looking to maximize upside in existing assets, typically at the end of fund lives. those are the three areas where we're spending the most time.
Sure. I love that you're starting to talk about the portfolio level as well, because as we
Hmm.
know, a lot of these wealthy families, just generally speaking, and just very, very successful entrepreneurs, right? Think about like Elon Musk. I mean, they've been
Yep,
able to utilize the value of the company and put leverage against the shares, and then use
that's
that
right.
capital to possibly buy another company or reinvest almost as a continuation vehicle at the portfolio level. So I think that's just really innovative, and that really takes some serious financial engineering. So it's partnering with partners like yourself, but then also just having very sophisticated attorneys, I'm assuming,
Yeah,
to mitigate their downside as well. I
that's
think
right.
that's a huge thing as well, right?
We're always going to defer to the attorneys, to your point, and sophisticated accounting teams and finance teams. This can get complicated very quickly.
Hmm.
Execute it. These are really interesting non-dilutive sources of capital. To your point, scaling funds.
Hmm. I would also add the thought around covenants. So I don't know if you have any insights in terms of like how covenants come into play when it comes to private credit and
You know
private
what it
equity.
is, Joel? The beauty of, I mean, I'm not going to skirt the question, but every single
Mhm.
facility
Yeah.
is reverse engineered and literally built kind of from the ground up.
Hmm.
So every covenant package is different, every structure is different.
Yeah.
And that's the beauty of what we do, not only on the fund finance business, but also
Hmm.
on at the investment bank when we're organizing a private credit facility of any kind. These aren't products, right? And with all due
Yeah.
respect to banks who are current, who haven't been lending recently, that's why we've seen this boom in private credit. We're not just throwing three or four products at a client. We're literally taking the time to structure each credit facility, whether it's a traditional against a company or for a fund in the fund finance business. So there's no standard answer to
Hmm.
covenants as an
Absolutely.
example. Every deal is different.
Yeah. And I think what's good is you have the building blocks, and then you can take those building blocks and then build kind of a personalized product. And I think
Yep.
if you can kind of create personalization, I feel like that's what also gives you an edge because, if you're, kind of selling these off the shelf products that everybody else has, sometimes you're not addressing the specific needs of what somebody's looking for, whether it's the credit utility versus also just kind of some type of return profile that a product offers as well. I'm assuming,
That's
right?
right.
Yeah.
That's right. Um, and again, it really speaks to this kind of golden age of private credit. You see it in every on every headline and every newspaper and every front page. And the reasons for that are real, right? Since 08,
Hmm.
09, the banks have been lending less, and there's been this multi-trillion-dollar void for entrepreneurs building these private credit funds to actually fill the void. And it's that flexibility and speed of closing and structuring that's allowing us to get a lot of money to work that's quite useful for not only operating businesses, but for funds, where banks take longer. And again, they're products, right? So they're not individually structured deal by deal per se.
So, that goes into my next question, which is, you've been in the game for a while. Maybe you can share a little insight in terms of how private credit has evolved. Now we've got a lot of technology and AI. I think, in this industry, AI could, and this is just my opinion, I feel like you could really innovate on some of the boring parts, right? So the accounting, maybe the back office, data aggregation. So I think there's like a lot of legacy technology that could be innovative. The truth is, this whole industry is still super relationship focused, and people just want to work with people that they like and they choose and they most importantly trust. But how has the evolution of private credit changed in your experience from when you started and in the last few years to now? And then, how is technology going to maybe come into play again? More of a general question.
Yeah, I mean, I'm by no means an AI expert, so I'm gonna defer. I'm gonna kick the can on that question, but I do think, the conclusion there is it's going to make the process of all of the data standardized aggregation, the data aggregation a heck of a lot easier and more seamless and quicker, right? So speed is the name of the game as part of this whole equation. So I think that's going to work in our favor, in our lenders' favor, and it is going to
Yeah.
be the ones that implement technology and AI that I think are going to win more so than others that aren't paying attention to that. But I'll tell you the private credit, the evolution of private credit over the last 10 years or so, I mean, it's been up to the right. and it has very much to do with obviously a robust economy over this period. Net users of capital year by year getting larger and larger. Banks, like I said, haven't been lending to the degree that they technically or theoretically could lend, right? They're for a variety of structural reasons and capital requirement reasons. Um, and investors are getting, as you know, more and more used to the concept of private investing, right? And those investments can be anything from accredited individuals to institutions to endowments to sovereigns to pension plans. So all of that put together, you have a huge supply of dollars available in all forms of private credit, and that continues to grow. So the supply side of the equation is growing, and the demand side of the equation is growing by virtue of it just being far more difficult to get financing from traditional banks, right? So
Sure.
you put the two of those together, and that's why you're seeing this kind of growth curve on the private credit side.
Yeah, I mean
That,
the whole equity market is, seeing a huge pullback
yeah.
from obviously a few years ago. So what do you have left? You've got other facilities now that can give you the capital to scale, and you figure it out depending on which vehicle you
And
use.
not only that, that's right. You figure it out because they're private credit groups typically can get very creative and they can add
Mhm.
flexibility. And relative to equity, typically this is non-dilutive, right? So
Sure.
you can it's not a perfect replacement for equity per se, but
Hmm.
structured credit facilities, they've gotten very, very crafty and getting very, very close. And that's what we've seen over and over and over again. And by the way, some of these credit facilities are getting very, very large, right? Back when we first started, a $50 million credit facility was large 10 and a half years ago, at least in our book of business. But now, I mean, you could easily see 300, 400, 500, $1 billion facility with ease, given the supply of
No,
capital.
I totally agree. And when it comes to talent development, when it comes to career development, this is something that I know you guys are, really passionate about, just, working with great people. Some of the people in our audience are, emerging fund managers, students that are looking to kind of enable their career as a catalyst. So if you were to kind of paint the picture for, professionals as they're growing, right? Because you have extensive experience, how can people build their career in investment banking, and what's the DNA of talent on Wall Street? When you guys are looking for talent and, as people are developing their leadership, trying to now be responsible to find talent. What is that DNA? What's the DNA of like an A team that you want to build when it comes to working on Wall Street?
It's a couple of ingredients. I mean, I think we can teach the investment banking business, to folks in general, right? It's not rocket science. It can get complicated, but we can teach that in the capital raise business in particular, right? So the first thing is this whole notion of working with fundamentally good people, right?
Mhm.
So embedded in that is an ethical foundation that we look for. I'm stating a lot of the obvious, but Wall Street hasn't always been ethical per se in every corner. Um, and then above and beyond that, Joel, it's we have a saying internally, it's all about professional persistence. And
Sure.
we try to ingrain that from our most junior analysts, even our intern
Hmm.
pools, all the way to junior analysts, all the way up to managing directors, right? It's that persistence that really is going to get a deal done, because for a deal to get done, certainly you need to be equipped with the kind of the intellectual heft to understand how it gets done and what needs to get done and all the stars lining up for it to get done. But 100 things need to happen, right? And if you're not persistent on a daily basis, all day, every day, to make each step along the way happen, the deal will not close. So it's a combination of all of that stuff that you kind of look for in people. Um, and it becomes abundantly clear when you're talking to folks in the way that they carry themselves, whether or not it's there or not. Does that make
And I would
sense?
assume, yeah, no, I think it totally makes sense. And then I think if they can combine all of that together, as one system, that system as a person needs to flow into the organization system as well, right? Because I mean, there's things that are happening upstream, and this is just me assuming, different types of organizations in the space. But like as you're thinking about upstream front office work, that needs to flow downstream effectively and flow down to compliance in a
Yep.
smooth way as well. It's just kind of a cohesive system, and we're going to talk about culture in a little bit, but I think all of that flows in as just being integrated seamlessly, I would say.
Yeah, it's integrated. It's this notion of professional persistence. It's also, communication is probably the number one skill set that we're looking for, because if you're not communicating effectively either internally with us and or outbound with investors and or the client,
Hmm.
things just can't happen. So if I were
Yeah.
to advise anybody, going back to your original question, that's probably the single most important area that I would spend time on, which is communication skills and candidly storytelling, because that's what we do.
Yeah, I would say, a couple nuggets that I have in terms of communication. I would say there's different layers of communication. So if you're going to like an executive meeting that happens once a month, you're not going to get into the weeds of, the granular metrics of probably an opportunity, but at that level, you're just kind of giving an executive overview, and you're packaging it in a certain way so that those people can consume that. And then obviously, if you're, sending some type of messaging to your direct manager or your peers, the level of granularity, the level of details, and the insight might be completely different. So that's something that I had to learn as a young professional, trying to, read the room and know the audience. I think also emails, sometimes like if they're not messaged the right way or they're super, super wordy, you might not actually get the clear action item across. So I don't know if you have any other nuggets in terms of just general communication. What are some ways that, you know, you've seen people optimize their communication verbally, maybe just when they're at a networking event in person, and then obviously, maybe over the phone as they're storytelling.
It's situation specific, obviously, right? But I
Yeah.
would say the general rule of thumb is less is more, right? Whether
Hmm.
it's an email and or a conversation, verbal, Zoom, conference call, or what have you. Staying to the point, getting granular quickly, concluding very succinctly, I think is
Hmm.
probably kind of the set of guidelines that you'd want to use, right?
Sure.
That's point, but that doesn't mean that you should not pay attention to detail, particularly when you're in our business and you're raising capital. You need to make sure that you are communicating the detail relating to a specific investor very effectively between, or at least having it happen very effectively and efficiently between your investor and your client, right? So, what is embedded in that? You really need to know the story and the nuggets that the investor needs to be focused on. And make sure that these two groups are not talking past each other. Make
Sure.
sense?
Oh, yeah, absolutely. So another point is, look, you're kind of in the center of the universe, right? You talk to founders, you talk to investors, you talk to institutions. All of this is rooted by entrepreneurship, right? There's people building firms from the ground up. They're building companies from the ground up. So, I'm going to ask you the same question. What do you think is the DNA of a good entrepreneur? And, feel free to throw in some of your stories in terms of how you actually decided to, launch Cambridge. What was going on in your mind, and what are some of the guiding posts that has helped you, you know, carry this along to where it is?
So I'm going to come back to the notion of professional persistence. When my co-founding partner and I started, we just didn't give up. And I know that sounds cliche, but literally every day we were out there and we just did what we had to do as a next step
Mhm.
over and over and over and over and over again until we got that step done. Then we moved to the next step and the next step over and over. So that professional persistence is a theme from day one. The other thing that I'll say is just being an entrepreneur myself is be able to, as they say, pivot. And a lot of this stuff is,
Mhm.
and a bit cliche, but it's the truth, right? So if something isn't working, stop doing that. pivot the business and do what you need to do to actually move forward. So pivoting over and over and over again as needed is important as well. And make sure that you're also taking, learning from as many people in your ecosystem as possible, which means talking to a heck of a lot of people, right?
Mhm.
Those three things over time, repeated, they compound, as you know, and that's what allowed us to, to build our business, 10 and a half years ago to what it is today.
One thing that I'll skip to as a point to complement all the things that you're saying is I think speed is a huge thing too. And one personal anecdote for me is, I worked in the data analytics space for investment management. And,
Yep.
if they're looking at some numbers and there's latency and they're just kind of sitting there waiting for that to happen, that slows them down. And, one of my favorite, most recent quotes is, money loves speed, right? So if you're
Yep.
trying to be persistent and you respond in a timely manner, you get them what they need to get within record time, faster than all your competitors. And I'm joking around because this podcast happened like a day. I think I texted one of your colleagues and like we're here, right? So that's just for
Yep.
me. And I felt that ever since I've met your colleague, a few years ago. I think I met him at an event and then immediately like the next day, I think he like called somebody and there was a meeting on the calendar. And
Right.
that makes a hell of a difference, just being able to, number one, be persistent, but that speed when it comes to reporting, when it comes to responses, that also just adds on to the customer service where you get the personalization, but then you got the response time to pair up with that.
I couldn't agree more. If you go to our website, you will see in big letters the word speed, and that is one of
Yeah.
our differentiators.
Hmm.
Um, you know, the in our business, we're competing with the biggest investment banks in the world, and one of our competitive advantages is we can move very quickly.
Hmm.
And when you are working with a founder or a CEO or a CFO, their most prized commodity is time as
Sure.
it's ours. And the quicker we move, the better off everyone is. Back to the original question also. So speed is definitely one of our competitive advantages. And that's why we will never be 1,000, 2,000, 10,000, 3,000 people. We're small by design, so we can move
Hmm.
quickly. The other thing that I'll say is just to go back to the original question, and when we first started this business, one of the things that we also did was we actually overpromised and over-delivered. There's a little bit of risk in that, but if
Hmm.
you're confident in your abilities, confident in this notion of professional persistence and whatever you're doing, that goes a heck of a long way because people would
Yeah.
say to us when we first started, "There's no way that you can do that," and we would prove it to them. And we
Hmm.
did it once, and then we did it twice, and we did it over and over and over again. And we built a reputation to be able to deliver because of that
Hmm.
overpromise and overdeliver.
Yeah.
That's not to say we didn't make mistakes, but we were very careful and calculated when we did that, and it worked.
Yeah. I think a big part of entrepreneurship, and this is not in any way, some type of religious reference, but I just think belief, having
Yep.
faith that the process would work.
Yep.
I know everyone believes in different things, but I just think the belief based on that persistence, right? You've been doing this 50 times, and like the 51st time, just having that confidence just from believing in the process, right? Believing in
Yep.
good people, believing in good systems that are put in place to have some type of repeatable results. Part of that just comes in, especially when there's tough times. It's like, man, we'll get through it somehow. We'll figure it out. And just having that belief in yourself. And sometimes, we see this a lot with all these crazy founder stories, but you have to be a little borderline, um, able to think outside of reality, right? When things are usually
You have
thought to be impossible, um, you have to dream big. If you don't dream big, you're not going to be able to go beyond where you were.
couldn't agree more. You absolutely have to have that unwavering belief because all of this takes energy,
Hmm.
a heck of a lot of energy when you're getting a business off the ground. And if you don't have that belief ultimately, uh, the energy is hard to come by on a daily basis. But we also, like I said, we also love what we do.
Yeah.
Again, I'm coming back to, another cliche, but it makes a heck of a lot easier when you love it, what you're doing on a daily basis. and the people that you're doing it with. That goes a
Yeah, they
long
had a whole lecture on passion.
way.
I think it was like 10 years ago or something. And it was about Steve Jobs. Steve Jobs was never really passionate about building computers. I think he had a really interesting background, but I think over time through repetition and becoming an expert and being good at something and then enjoying it, you end up just by default getting passionate about it. So we're both passionate about, public and private markets and obviously private credit. But, you may not have that passion when you start out. It's just something that is a necessity. You know that you want to build something, but, that passion just eventually, just by default, becomes part of your DNA. Would you agree?
It's interesting. You were a master connector, and really that was our thesis day one.
Hmm.
We
Sure.
love connecting people, right? And it doesn't always have to be transactional. It doesn't always have to be
Yeah.
for a fee. And that is at the end of the day what we're doing, right? We are connecting our clients who are
Hmm.
typically privately held businesses with investors.
Sure.
And and the storytelling in between is another thing that we love doing. So A to Z, we were fairly good at it. And that's it just built over
Hmm.
time.
Let's talk about culture. So we talked about the system, we talked about hiring talent. How do you continue to keep people fired up and excited? And, I mean, obviously just through doing good work and doing things that you really love doing. But how do you build a culture? And the reason why I ask is I've had a few managers on my podcast that have retained support. They've retained some professionals and coaches to come in and actually help them like define what their culture is, what their mission is. And you guys do have a mission statement on your website, but how can leaders continue to establish some type of culture and then and maintain that culture and let that culture be maybe a living organism?
So I mean, I can tell you how we do it, and we
Mhm.
continually are trying to build and improve upon this
Mhm.
notion of, our corporate culture here. But for us, it is as much communication across the organization as possible. And
Mhm.
again, another benefit of staying small by design is you can actually do that. I'll give you, our most powerful example is every morning we have what we refer to as a pipeline call, and our
Mhm.
bankers get on. It's at 8:30 in the morning. We go around and we review the day before. We review the meetings coming up that day. Sometimes we do a weekly look back, and everybody has an opportunity to talk about their deals, talk about process, talk about investors, talk about new investors, talk about term sheets, whatever is on their mind. And we go around and everybody either weighs in, but that happens on a daily basis. So that's number one. Number two, even though my co-founding partner and I are often very busy throughout the day, we always make a point of making time available for all of our bankers. And that's from the lowest level associate or intern all the way up to MDs and everything in between. So it's that communication that really defines our culture. And
Mhm.
how do I define our culture? At the end of the day, we're in a transactional business, so we're only as good as our last deal. So it's truly a hustle culture. We have to be out there originating transactions, bringing on new investors, all the while working on existing transactions to close, because without that, nobody eats. But we do that on a daily basis, and we re-emphasize all these points on that pipeline call every single morning.
Tell me, one level below the culture is the leadership and, developing leaders. Do you think leadership is natural, and just people have it, or do you think it could be learned as well?
I think it can be learned. So I'm
Hmm.
I, I'm going to give you an answer that's going to swerve around a little bit,
Sure,
right?
that's fine.
Some folks are naturals, right?
Hmm.
So some folks can take their business from literally zero and build $1 trillion company on their own, right?
Hmm.
Um, Other folks, I think, are naturals and can build a business to a certain level, and
Sure.
then they have to bring in the next level of leadership to take them from here to here. And one of the greatest examples in history, I think, are the Google guys, obviously, where they brought in, I think it was Eric Schmidt. Do
Eric
I have that
Schmidt.
right? Yeah.
Yeah, Eric Schmidt.
So that's kind of the second type of leadership,
Hmm.
and then the third type is outsourcing leadership, which is I have a particular skill set.
Hmm.
Um, I believe in what I can do. It may be a technical skill set, but you really need management to run the day-to-day operations of the business and think about scaling and all the various things that we do. there's an opportunity to bring in someone to do that. So I think there's
Yeah.
three kind of different versions of leadership.
I totally agree. So two examples that I like are, Travis Kalanick, right? So I mean, there's a
Yep.
certain level where I think you need to separate the founder and have someone that's maybe seasoned and just kind of already experienced in becoming a public company. So they brought on Dara from I think Expedia,
Yep.
right? So
Yep.
he was running that company, but that was a good example. And then Elon Musk. I mean, he's mentioned many times on lectures that he's given that just he just doesn't want to be the CEO.
Yep.
He's a product person, and he's mentioned this a few times. He's like, look, you know what? If I'm a CEO, there's chores I got to do, which kind of makes sense, right? There's
Yep.
organizational things you have to do.
Yep.
Obviously, at that level, you probably have to do actual annual audits and go through that process. So, I think he hired the woman that was running NBC Universal to
Yep.
run Twitter, and all of his companies have people that run the business, but he's still the visionary, right? So I think that's pretty interesting. So I totally agree with you. I think some of it is innate, but then at some point when there's some corporate responsibility, they may have to, graduate to a different role in the organization where they may be kind of,
Or just different skill sets, just
yeah.
radically different skill sets that other folks have experience with. And I would probably put us in that middle bucket, which
Mhm.
is I don't think that leadership in our organization, I guess, would be me and my co-founding partner Howard. I don't think we've plateaued yet. I don't think we've hit the top of what we can accomplish, but it would not
Mhm.
surprise me that at some point in the future we may contemplate bringing a group, a person, or a team that can take it to even the next level. I wouldn't rule it out.
Sure. No, that's great. A couple more points. We talked about relationship building. We talked about emotional intelligence and being able to communicate properly. What are some ways that you think are important to build that long-term trust and build those intimate relationships? I know a lot of people, obviously, from our platform have started to build their own ecosystems, right? So they've started to build communities around them. They're starting to do, dinners, happy hours. So the community building is there. So any insights in terms of like how people have successfully built communities and any learnings along the way, because you guys have a huge community. And then I think the big thing too is like having to connect with people and not needing anything in return because you really
That's
enjoy it. I think that just pays long-term dividends. And I've connected friends of mine from years ago to other people, and it's just been amazing because you never know where that heads. So I
yeah,
think that's been one thing for me. But any insights in terms of just
yeah,
best practices for just
yeah,
community building?
yeah. Yeah. I keep this super, super simple, and it seemed to work for us at least. One is say yes to everything. Say yes
Mhm.
to every meeting. Say yes to every coffee. Say yes to every dinner. Say yes to every breakfast. Say yes to. And some people naturally do that.
Yeah,
I had to learn to say yes, and it's the gift that keeps on giving because you just don't know what's going to come out of it, right?
yeah.
So yes to everything is kind of a theme.
Mhm.
Obviously, there's a certain bar that a meeting or a group or an invitation has to
Mhm.
hit, but generally the
Yeah.
answer ideally is yes.
And you can still say yes to everything if you have the staff, right? Because someone can go in
Yes.
your place.
Yep.
So that allows you to do that, right? At scale.
Yep, that's exactly right.
Mhm.
So, because you just never know what's going to happen.
Sure.
I was, well, I could give you a million examples, so I won't start going down that road. So that's number one. And then, so community building. And then what was the second part of the question? I think you had a second part, a part two.
Relationships and trust. So I think,
Yes.
obviously saying yes to everything,
You already
that
answered the
opens up
question.
many doors.
You already answered the question, right? Which is provide value
Hmm.
with no expectation in return.
Yeah.
You do that over and over and over again, and the value that's going to come back to you is going to be multiples. It's just the way that the world works, right? So not everything is a transaction, not everything is a fee, not everything is for credit.
Hmm.
Provide value over and over and over again to the community, to a community that you trust, and it will come back to you. So those are the two things: yes to everything, and just have a value proposition mindset in general.
Let's talk about brand building. And you know what? This is an interesting take, right? So Nike doesn't ever say in their branding, hey, we've got the greatest shoes on the planet. Our shoes are so ergonomic. They just say, just do it, right? And I think Apple was like, think different. So how can new brands, whether they're entrepreneurs, whether they're fund managers, and I've seen a lot of this because, through our platform, we have many different fund managers that have different takes on how they're building their brand and resonating with their reputation. But just any high level responses to just brand building and maybe something that you've taken into to build the Cambridge Wilkinson brand. Obviously,
Yep.
there's a lot of the foundational stuff that you've already covered, but maybe also just to take on, in general, without naming any names, but just brands that you recognize or companies that you've seen that are successful. How have they thought about brand?
Yep. Um, the my personal answer is very simple. Execution is difficult, right? And it goes back to what I said earlier. Overpromise and overdeliver. Whoever your customer is, whether it's a product or service, overdeliver and it will enhance your brand. At least that's the approach that we take,
Sure.
right? And that's how we started the business. Um, that's how we continue to think about the business. And I hope we're doing that, over promising and over delivering
Mhm.
um, to your client base. In terms of, obviously, I can name a million brands that are absolutely fantastic, from Coke to Nike to Apple, all the one, all the obvious ones. I guess this one's sort of obvious, but the one that I've gravitated towards the most personally is Berkshire Hathaway.
Mhm.
So anything and everything that Warren Buffett and Charlie Munger have said, I've probably read, maybe multiple times. And it's really the way that they've kind of talked about their brand building and their
Mhm.
culture and building their business. We try to borrow from those two guys in particular the most.
Mhm.
And it's all very simple and sound advice. And they give it every year at their
Yeah,
annual meeting and at various podcasts um, that Charlie in particular used to do. So we
sure.
pay we pay very, very close attention to the Berkshire guys.
Yeah, I really, highly recommend I think it was Poor Charlie's Almanac. It's a really
Yeah.
great, book that just has all these just pieces of conventional wisdom, just basic lessons in terms of just being an investor. So for the audience, if anyone hasn't read that book, definitely a good book. And I try to share, books that I'm reading, periodically throughout the community. I guess, yeah, that's a good question. Any books that you've read recently or things that are on your reading list? I really enjoyed Stephen Schwartzman's book. I also
I
really
did
enjoyed
too.
David Rubenstein's How to Invest book. That's actually really good on audiobook because he's got audio interviews. But any other, maybe just
I mean,
business or
it's
finance
every
books?
business book that I can get my hands on,
Yeah.
I will read candidly.
Hmm.
Um, I've read the Schwartzman book. I've read every Buffett book you can ever imagine, the Munger books. I think Thiel had one, Zero to One,
Yep.
that was pretty good, that I found to be pretty good. There was a book I recently read on scaling. And most of my book recommendations, by the way, I'm more of a podcast guy.
Hmm.
So any and all business related podcasts, you name it, I probably have it in my queue. So and business biographies as well.
Hmm.
Any successful entrepreneur that has a business biography, I would recommend reading those books as well, about how they went about building their business from scratch.
Yeah,
There's
that's
one,
amazing.
and there's one podcast in particular, How I Built This on NPR. That's
Hmm.
super. There's another guy, David Senra, who has a podcast where he's reviewing autobiographies and biographies of entrepreneurs. Anything around the business world that you can listen to or read, I would highly recommend it to your audience.
This is an Easter egg. How do you manage like work-life balance? I guess, for me, and I'll just start with me. I just try to separate personal time from family time, but I also try to integrate it in. I'm not burning the midnight oil, but in terms of like work-life balance, I think it's important to kind of have it, symbiotic at some point. But in terms of just kind of managing just other components of life as a professional? Any just high level thoughts around that?
Well, yeah, it's very different today than it was when we started the business 10 and a half years
Yeah.
ago. It's far easier because there's
Hmm.
structure that I can put around it. And we have
Yeah.
incredible people that can support that concept. But when we
Hmm.
started, candidly, those first few years, I would argue there is no work-life balance.
Yeah.
That's not
Absolutely.
to say, you know, we were working 120 hours a week or 100 hours a week, but when things needed to get done, we just did it and we were
Hmm.
happy to do it. And it didn't matter if it was a weekend or if it was in the evening or super early in the morning. We just did it and we were happy to do it, right?
Sure.
Today, like I said, we're fortunate that we do have a team where I can actually have reasonable hours and reasonable vacation time and reasonable family time. And we've organized it in that fashion. And by the way, we also insist on our team making sure that they're getting that balance that they need as well.
Hmm.
It's just a different mindset around investment banking. You hear all these stories about these people working 100 hours a week. We do not do that by design. We think we can reasonably get our business done within the, you know, within the confines of a 40 to 45 to 50-hour work week. But if there's a call that you need to take from Australia, I had a few this week at 8 o'clock at night or whatever it is, you do it.
Sure.
Does that make
Absolutely. Well,
sense?
hey, yeah, no, this was amazing, Rob. I really appreciate you being so generous with your time and
Of course.
sharing all these stories. I'd like to wrap up with one final question, just a piece of advice that, you give me so many nuggets, so it may not even be necessary, but like if there's something from like a mentor or just from kind of a work experience that you'd like to share as a life lesson, to just close out, would love to. I'll
Yeah.
take whatever I can get.
I'm going to repeat the biggest one for me,
Mhm.
and that is talk to as many people as humanly possible.
Yeah.
If you aspire to be an entrepreneur and or grow a business and or become a fund manager, there is no downside, I
Yeah.
found.
I totally agree with that. Well, hey, Rob, thank you so much. And have a great rest of the week. And we'll catch up soon.
Thank you. Appreciate the
All
time.
right. Take care. Disclaimer. This material has been prepared for informational and educational purposes only and is not intended to provide, nor should it be relied upon for tax, legal, or investment advice. You should consult your own tax, legal, and financial professionals for your specific situation. The views and opinions expressed in this material are those of the author and do not necessarily reflect the views or opinions of Finalis Securities LLC. Securities offered through Finalis Securities LLC, member FINRA/SIPC. Cambridge Wilkinson and Finalis Securities LLC are separate, unaffiliated entities.